Thank you very much for joining us here today on the Market Day Report. The grain futures got off to a little bit of a weaker start for corn. Soybeans just a little bit on the higher side, but some heavy losses over here in the wheat pit. Let's go to the corn board here first, and we'll start right here where we find September corn down 3.5, about where it started the day trade, 360 3/4. The new crop December down 3.5 at 375 1/4. The soybean market started out with the overnight trade about 10 cents higher. But now that we've got the day trade underway, the soybeans are a penny higher after starting out about 3 cents higher. September soybeans up 1 at 82.5. November up 1 at 893 3/4. Double-digit losses in the wheat market and accelerating those with September Chicago wheat down 17 1/4. July Chicago wheat, the new crop down 11 1/4 cents, 585 1/2. September Kansas City wheat down 17 1/4 at 547 3/4. July down 13 1/2 at 603 1/2. September Minneapolis wheat down 17 cents at 591 1/2. Not sure about that July Minneapolis wheat with all the rest of the contracts on the weaker side, but the December cotton market up 64 at 82.03. And joining us here at the desk in studio, how are you doing, Chris
Doing
Swift?
great, John. How about yourself this morning? Good.
What do you make of the beginning of the day here for the grains?
Well, it's kind of interesting. The wheat market, when Tim showed the rain that's coming in the Kansas area, that probably brought some good impact, good rain into that area to help with the winter wheat seedings that are coming up in a couple of weeks. So I can see that. The great negotiations starting back from China and the U.S. on their tariff negotiations. We got news of that Friday afternoon. Have heard more over the weekend about it. So that's probably kept beans from moving any lower. And the corn crop, I don't know. I think corn crop's pretty much made. And USDA, when they came up and raised their yield predictions on there, that pretty much just solidified. There's just not too much more to discuss in the corn market until we get into harvest.
Yeah, and harvest is already taking place
yes,
in
South.
some parts of the South
That's
already.
Correct, yes.
What about this crop tour that is now kind of making its way around? If they would come in with a number under what USDA does, could that give us a pop in this corn market?
It could give a little bit. I don't know how much they would be able to get up underneath that, because I think USDA does do a good job of surveying the fields and looking out into it. But there's always weather issues, and I think this year it may not be the yield as much as it would be harvested acres. You had mentioned some hail damage, and so maybe what we see, instead of some decreases in yields, we begin to see a little bit of unharvested acres, an increase in unharvested acres.
What about on the transverse side of that then? What if they come in with a number that's higher than, because, well, nothing's out of the realm of possibility at this point.
That's very true, and they could. There's no doubt about it, but I think it would be very difficult to get much above. That was a large percentage jump in the yield from 171, I think, to 174 in the corn, so that's a pretty big jump right there, and it would have to be awfully good corn from this point forward to see that, and I just don't think we've had the weather to produce any greater yields than what we see.
But demand for corn remains
phenomenal. It continued. Last week's export sales were really good, and I think that's what's keeping the market up, is we know we have to have those grains, and although they may be in plentiful supply, they're in plentiful demand as well.
Chris Swift, Swift Trading here with us. Chris, when we come back, let's talk about this livestock trade.
Sounds good. Look forward to it.
Be sure and stay with us. We've got more coming up here on Market Day Report in just a moment. On the livestock side of the market today, we finished Friday with a positive note, but we didn't start out Monday with that. In fact, all three of the live cattle, the feeder cattle, and the hogs started out weaker. Let's go to the live cattle board first. And we right now have the October down 47 at 110.40, December down 42 at 114.20. That October real close to where we traded cash in the South last week. The December down 42 at 114.40, as we mentioned. The feeder cattle market weaker. September down 80, 151.03. October down 93, 150.92. November feeders down 85 at 150.80. And for the hog side of that equation, we've got the October down 135, 57.25. December down 43 at 54.85. And February down 50, 61.15. Chris Swift is still here with us. All right, what are your thoughts here as we kick things off on a brand new week with a cattle on feed and a cold storage coming up at the end of the week?
Right. I think it's going to show elevated numbers of both, unfortunately. I think our on feed number will grow once more again, maybe topping 105, 106 this time. The cold storage should be elevated, as well as pork, because of our tariff issues that we've had. We probably stockpiled some of that. I don't think they will be damning, because everybody pretty much knows that's the production facilities that we're in right now, is we're just producing a lot of proteins. But one thing that we've really made caution of is we've seen a lot of decline in the open interest in the live cattle market. It's lost 25% of its open interest. So there's something out there that is transpiring that is causing traders to exit the market and not want to participate in it. That creates further volatility and greater price movement back and forth. So I want traders to know that this is kind of a iffy situation right in here, and we're not as much concerned about price fluctuation as we are the volatility of it. I don't think really prices are going much of anywhere higher or lower, but they can go up and down a lot of times with this decline in open interest.
Which is kind of interesting because we ended with such a positive note in the cattle market on Friday.
We did, but this has been going down for months. This is not just an overnight situation. We've been losing open interest for months and months in the live cattle. A lot of it has been because of the basis. We've seen some really, really wide positive basis that hasn't made futures very attractive to want to use for the commercial side of it.
What about this hog market? Now we've got the talk out here that we may be close to an agreement, then it gets kind of quiet, and then we talk about an agreement, the hogs kind of rally a little bit, and if you look at a hog chart, wow, we've recovered pretty well, I would say.
Yeah, the African swine flu has made for some really good news here, as well as the tariff issues and any kind of resolve in that. And again, that creates a lot of volatility. There's not really a straight up or straight down. And I take that back. It was pretty much straight back up again when we took off, but it had been going down for a while. And then you get a really volatile move to the upside, and now we're already starting back down again. And the news begins to subside, but the price just continues to fluctuate and bounce back and forth.
So with this little bit of downside action, could that maybe be a sign of maybe we're trying to stabilize the market a little?
It's possible. We had gotten as much as $23, $24 negative basis, and now I think we were 2 or 3 positive this morning. So that will help a tremendous amount for pork producers to be able to lay off some risk at a higher price than what the cash is currently trading at.
But the demand is going to be the key to all of this.
And I think demand's still good. Yeah, demand is still excellent, especially domestically, and then export. Nothing has really changed other than the price, and it just costs them 25% more now to get that pork in from the United States. And if something were to change in that, it would relieve some of the pressure, but it's not the defining factor right now.
Well, maybe we can increase it. It's National Bacon Day.
Yes, I'm all for it. Ready for my homegrown tomatoes.
There you go. Chris Swift, thank you very much.
Absolutely,
always good to
John.
talk to you.
It
Thank
is
you very
a
much for
pleasure.
being here with us. And so always a joy to have Chris here on the set with us.